How do you determine if the markets are overvalued? Market rallies and you get excited, and then at some point it's how can it get this high? It's got to crash. It's completely overvalued. At some point it's going to fail. And you get in this mindset that says we're waiting on the next crash. The reality is the market is a constant valuation of the expectations of the world, of the market's future. And therefore, your opinion, my opinion are all mixed together, and the market value today is actually a mix of all those perspectives. So the shorter answer is you're not going to be able to predict with any predictability what the market's going to do. So what do? One big thing is relying on an advisor that can give you some perspective with their experience, their history, and it's not their money they're talking about. Now, they better have money in the market if they're advising you to put money in the market. But if I'm having a conversation with you, I can have that third party, second opinion to say, you know what, this is how I see it. And we're talking about your money and your future, and you're emotionally tied to it. And sometimes too much, in the sense that you're relying on this market performance for your happiness, satisfaction, success, your worry, your peace of mind. And that advisor can step back a step and say, okay, let's put this in perspective. Now, if you believe the market's going to crash and your advisor believes the market's going to crash, it still doesn't make sense to cash out. For one, you might be wrong. And when you're wrong and the market doesn't crash, you become wronger. And that's probably not a word, but the concept is you cashed out at this level, the market went way up here. You're now more convinced that it's overheated because you thought it was overheated down here, and now it's way up here. You certainly think it's overheated again, and so you're just going to continue to stay on the sideline as it may continue to go up because this is the consensus value that the world has given it. And you were out here and you said it's too high. Well, it's already gone up to here. You're not going to go back in at this point. If you do, you've lost confidence in your own perspective. What I suggest is if you believe it's going to crash and your advisor believes it's going to crash and you guys believe, okay, we need to be conservative, we need to be cautious, do not cash out. Go down a notch, downshift, one risk level. Conversely, the market crashes and you say, you know what, this is a short-term crash, the world is not coming to an end, the markets will recover. Your advisor should be saying, okay, let's upshift. Now you don't go from 0 to 60, just like you shouldn't go from 60 to 0. But the concept is, if you have a belief, you should act on it. If you have reasoning and rationale behind it, and it's not simply emotional decisions. But if you have rational decisions and you say, you know what, I think we need to take a dose of caution, we've had great returns, that's perfectly fine. If you were in an 80-20 portfolio, maybe you should go to 60-40 for a little while and just ride it out. And if you're wrong, you're participating in the market almost as much as you would have been. But if you're right, well, now you have a little extra in cash, a little extra in fixed income, a little extra in bonds that can go right back into the market when the market is down. Now you have to have that long-term perspective because it's natural to think the market's crashing and it's always going to crash. You have to realize, you know what, when it's down, it's on sale. That's the time you should be buying the things that are going to go up. And it's not just everything doesn't go down and up together. Some things go down much more, and conversely, some things that didn't go down very much may be the ones that do the best in the recovery. And that takes perspective, and every crash, every recession, every market correction is different. That's how I see it. That's how you should be looking and thinking about things if you think the market is overheated. I'm Justin Struble with BSG Advisors. I'm not a broker, I'm a fixer.